Senco Gold. Let's invite the first management on our show today. Recently, the company raised 455 crore rupees via a QIP, and marquee investors like Tata AIA, ICICI Pru, Sundaram Mutual Fund, Bandhan Small Cap, all of them participated in the company's QIP. In an earlier interaction, the company had said that this fundraise was primarily for working capital, and they plan to add about 18 to 20 stores annually. Suvankar Sen, MD and CEO at Senco Gold Diamonds, is now with us on the show now. Mr. Sen, thank you very much for joining in. This is Reema here. Give us some more details. 455 crore via QIP. What would be the exact utilization now? And do you already have cash on the books? So, for the next, 1 year, 2 years, lay out the capex plans.
So basically, initially we would be looking at reducing, some amount of debt, but that is going to be a temporary phase. And in the long run, the whole objective is that every year we intend to open about 18 to 20 stores. And out of the 18 to 20 stores, what we were targeting, about 8 to 10 stores will be company-owned, company-operated, and 8 to 10 stores would be franchisees that we would be aiming to open in the tier 2, 3, 4 towns of the country, focusing more on the eastern and the northern part of the country. Now, for each and every store that we open, with the gold prices that have gone up by almost 25% over the last 1 year, we would be requiring anything around 20 or 22 odd crores. We usually have about 2.5 crores of capex that we need to open a store, and about 22 crores that we need for the working capital. So basically, a part of the 459 crores, to be more specific, what we have raised, 150 odd crores would be going towards opening of new stores. Also, what we have seen, especially with the duty cut that happened in the month of August, that there was a very good demand in the business, and our existing stores that already existed, there was actually a situation in which we thought that if we could have kept more stocks, more inventory for the customers, we would have been able to maybe sell more. So a part of the amount also would be kept towards, upstocking the inventory at the existing stores that have been doing very well. So basically, it's all around, reducing the loan from the short term, controlling your debt, and then over a period of time, focusing on increasing inventory and opening stores. That's how we would like to look at it.
What's the short-term debt, and how much would you bring it down to?
So our debt is mostly in the form of metal gold loan. So we have about 1,500 crores of loan, out of which about 60%. So that's about 1,000 crores that we take in the form of gold loan. And since we are doing hedging, and hedging is a process in which we are either taking metal gold loan where the price is unfixed, or we are selling in the futures, on the MCX. So 1,000 crores is metal gold loan, and 500 crores is the cash credit that we have in the books.
Suvankar, hi, good morning. Prashant here. Somebody I was talking to was saying, well, if you think about it over a long sweep of time, within what you call consumer sectors, maybe the one space which has made the most amount of money for investors is jewelry companies. And we've had Senco, of course, has come to the market not that long back, but we've got others listed for a long time. But you have also delivered, and your stock has also done very, very well, as have others. That's having said that, Suvankar, if you can tell us, with this investment, with this sort of fundraise that you're doing, and you said, where is this money going to go towards? How much is this going to be towards the non-jewelry, newer segments, newer areas that you want to build out within Senco?
We've formulated the company Sines as a wholly owned subsidiary of Senco, and which is focusing on lab-grown diamonds and leather and perfumes. But I believe that the non-jewelry part of it, that the money will be utilized, will not be more than 40 to 50 crores. And that also won't be an immediate investment. It will be over a period of time. So see, every year we intend to, we are planning, and what we see is about 200 to 250 crore of PAT that is estimated as for the projections. So it's not like this whole money will be utilized for the non-jewelry segment right away. It's going to be a phased out process, but what will be immediately utilized right away is the inventory for the stores that are there, that are doing well, or the stores which are coming up. So that's how one has to look at it.
All right. Suvankar, I missed that number. 250 crores is what?
250 crores. No, 50 crores is what we are estimating that would be utilized for the non-jewelry business
Yes.
over a long
Yes.
period of time. It is not 250 crores. It is
50 crores.
459 crores that is raised. So 150, 160 crores that is going to be utilized for the new
No,
stores.
you
that are
also
coming
mentioned,
up.
Suvankar, you also mentioned
Yeah.
200, 250 crores of annual profit. So what was that
Yes,
number?
yes. Oh, yes. That is what we are saying, that when we 200 to 250 crores of
Yeah.
profit is that what we are estimating over the coming years. This year, because of the duty cut, there is an estimate of about 60 crores of loss that will be. It's a one-time loss that we are assuming going to happen because of the loss of the duty paid due to the government duty cut that happened in the month of July, August. But other than that, year after year, we are all estimating that there will be a profit that the company will be earning of 200 to 50 crore every year. So that is where the profit will be utilized for the new businesses also. It is not only the money that we are raising in the IPO. That's what I'm trying to say.
So around 250 crores by FY26, FY27, should that be the goal?
FY26, FY27. Yeah, in that range, exactly. 220, 250.
All right. Okay, got it. Very quickly, how has Q3 shaped up? As good as expected?
Yes, Q3, if you look at it, October, we had the Dhanteras month. It was about, we had the best ever sales of 1,000 crores. And November, the first week of November was slightly slow. But after that, the prices came down. And I think that the wedding season, buying whatever had to happen, that happened in a pretty, strong, robust way. So I think that, yes, Q3 is shaping up the way it is. If we are really estimating that what kind of growth we are looking at for the whole year, I think anything between 16 to 18% would be a good number to expect for the sales that we will be seeing as we end the year, Q3 and Q4 all put together. So that's how we would like to look at it.
Appreciate you joining in, Mr. Sen. Thanks a lot. Wishing you all the best towards the end of this calendar year. And we look forward to touching base again in 2025. But you seem to be sounding quite optimistic about the prospects of the company. 250 crores of a net profit by FY27. I think that's the big takeaway.